Hello, everyone, and welcome back to the virtual Peterson Institute for International Economics. I'm Adam Posen, the Institute's president, and it's my distinct pleasure today to welcome back a colleague and friend of many years, Marco Buti of the European Commission. Many of you are coming in, and apologies for being 2 minutes later than usual starting. So you are wise enough to know that it's worth listening to Marco. Formally, Marco is the Chief of Staff for the Commissioner for the Economy at the European Commission, Paolo Gentiloni, and previously served a long stretch throughout the previous crisis, as Director General for Economic and Financial Affairs, DG ECFIN. He's been the Commission Finance Deputy of the G7 and G20, and he is published extensively, including with the Peterson Institute occasionally, on economic and monetary union, the political economy of European integration, macroeconomic policies, and global governance. The broader context for Marco is that he is one of the most distinguished, long-standing public servants in Europe. He is substantive and, most impressively for an official, he is evidence-based and flexible-minded. If you see the evolution of his statements on fiscal policy and the Stability and Growth Pact through the years, it's a marker of how he, and through him, the Commission has learned and adapted as realities have changed. And he gave an excellent speech roughly a year and a half ago at the Peterson Institute on some of those issues. Marco volunteered to bring us up to speed today on Europe's economic policy response to the pandemic. And this is all on the record, and we will take questions from registered viewers on the Q&A function on Zoom after Marco's initial remarks. So Marco, welcome back, as it were, to Peterson, and thank you very much for joining us today.
Thank you very much, Adam. Great pleasure to be here. Actually, not great pleasure to be here where I am now, but great pleasure to be with you. No, thanks for organizing this. Actually, you recalled the presentation I made in conversation with you. It was actually a year ago, or a bit more, where I drew a bit tried to draw the lessons of the experience during the financial crisis, how Europe and the world actually managed that episode. And actually, I did not think at all at the time that those lessons would become so relevant for actually dealing with the present crisis. And you know, they have become relevant, I think, actually much earlier than one could have expected. But I think someone like me who has undergone and maybe still has the scars of the financial crisis, I think this is that experience there is extremely important and relevant to think about the current crisis as well, even though the two crises are obviously of a completely different nature. I think to start with, let me go back a moment to how we see the outlook. In Europe, not so much on the numbers. There is such a huge uncertainty that you know, pinning down specific numbers is a hazard as an exercise. But we published last week our autumn forecast, and I would actually take out of that four key messages. I mean, okay, the first one is that we are not in a linear crisis. So the hope that we had, you know, huge shock, and then with emergency response, and then moving gradually to recovery and so on. This is not happening. So we are in a second wave. I think we were hopeful during the summer, a bit foolishly, I think, because if one looks at historical episodes of pandemics, there is always a second round. Sometimes the second wave actually more problematic than the first one. So no linear exit in this. Second point is that this is a huge shock, you know, basically twice as large as the financial crisis in terms of impact. And if one looks in our forecast at 2022, that's the time horizon of the first, the euro area as a whole would not have reached the pre-crisis GDP level by then. And if one takes the let's say, trend growth pre-crisis, we will be 4 to 5 points below 2022. Third message is that this is a shock that is common in origin, but widely differentiated in terms of outcomes. So you have countries, bouncing back more strongly than others. Others being, remaining in much more, many more troubles over time. Even though, given the uncertainty, difficult to tell who is who at this stage. Final message: if one takes a bit of a longer-term perspective and looks at what would be in our forecast 2021, so with a recovery, even though less than what we have foreseen before because of the second wave, it compares GDP level to pre-financial crisis period, so 2008. We have in Europe, Germany, which is going to be about 12 percentage points higher than the pre-2008. Italy, to take the opposite extreme, is 9% lower. So there will basically, within Europe, between Germany and Italy, over 20 points difference between in the evolution over the medium term, looking back. So this brings the issue of a structural divergence superimposed onto a more cyclical short-term one. And actually, in a little piece I wrote for Vox CPR in July, I talked about the risk of a great fragmentation. So, and great fragmentation is, I think, is a risk there that we have throughout the world. It's not only in Europe between countries, it's between categories of work, it is between sectors. Some have actually talked of a K-shaped recovery with, divergence between, typology of workers, sectors, etc. And between generations. So the risk here to have yet another lost generation is a very present one. So I think if you take these four messages, I think these help to interpret what we are putting in place. What do we learn from the, let's say, from the financial crisis, which is useful for this? Very quickly, the first point is the narrative on the crisis. I emphasized last year when I was there that had the crisis in Europe started with Ireland instead of Greece, we would have had a completely different type of policy response. Now we are in a crisis with really an exogenous shock. So it implies that all the moral hazard considerations, which actually characterized the very painful divisive debate in the financial crisis, are not there. So it's an exogenous crisis, no moral hazard consideration. Second point, we need to have a much more balanced policy mix. So we cannot, as we did in the financial crisis, largely leave the ECB alone in carrying the policy response. So this is second very important. On the fiscal side, I emphasized also last year, I remember vividly, the fact that it's very difficult to get to a fiscal stance that is appropriate for the area as a whole simply by horizontal coordination of national fiscal policies. We need vertical coordination as well between a central fiscal capacity and the national fiscal policies. Finally, I think very important, we pay the price geopolitically in Europe for not having solved the euro area crisis in a decisive way 10 years ago. So I think this geopolitical dimension, I think, is very present in what we are putting in place right now. So what are we putting in place right now? I think Europe has had, I think, a substantial and robust response, still in the making, in part. So we have not only the ECB with a PEP program, the 1,350 billion of asset purchases. We have also clearly the national fiscal response. I think the measures add up to over 4% of GDP discretionary measures, together with the automatic stabilizers, an increase in the deficit about over 8 points. And actually, it is, if you look across the Atlantic, it's almost exactly the same in 2020. An increase in the deficit in the US and in Europe, which is largely the same. Clearly in Europe, since we have larger stabilizers, more coming from the automatic stabilizers, less in the US, but it is basically the same, broadly the same order of magnitude. On top of this, we have the proposal at the EU level. We had the decision by the Eurogroup on what we called SURE, which is cheap loans for supporting short-term war schemes, the ESM, the pandemic response, and the EIB, about 200 billion, and overall over 500 billion of, in this case, is cheap loans by these various institutions. I think on top of that, and that is the big novelty, we have what is called Next Generation EU, and within that, the Recovery and Resilience Facility, overall a 750 billion, in part in loans and in part transfers. The novelty, I think, on this is, I think, very, very important, not only the size, but also the modalities, and there are novelties on both the revenue and the expenditure side. On the revenue side, for the first time, the EU will go out and borrow on the markets, so issuing common debt. Is not the mutualization legacy debt, we know that is out of the window, but new debt in order to finance common projects and to finance member states' policies, in particular via transfers to those more hit by the crisis. So both revenue and expenditure, which I think show important novelties in our action. The facility is called Recovery and Resilience. So the first R is to support the recovery next year. It's going to take a bit of time still to put things in place. Member states will have to present national, let's say, reform resilience and recovery programs. So that is what is, I think, going to come. The EU will going to borrow in the market. The second R is also important, the resilience element. So what we'll need to do is to make sure that these transfers actually finance reforms and investments, so clusters of reform and investment, to make sure that you strengthen the resilience of countries, so that when you come to the next crisis, the growth bottlenecks will have been lessened in that. And we do that also by conveying the resources in a transformative way towards the two transitions, so digital and environmental transition. So to have a growth model and a growth agenda which is sustainable, environmentally and socially in the future. To conclude, what is to be done now? Okay, first of all, there is still a discussion, and it is not an easy one, to actually transform the political agreement, which was achieved by the leaders back in July, into legally and legal institutional programs. There is discussion in the European Parliament, in the Council. There is an issue of rule of law, which is an important stumbling block still in front of us. So the German presidency, and we are lucky to have the German presidency actually this time round, will work to overcome these obstacles. And then member states will have to present their programs so that we start disburse and implement this in the course of next year. So this is what is on the plate. I think is an important development. I think the markets have seen this as a paradigm change. Whether it is really a paradigm change or a very large one-off, I think will depend on the next moves, and in particular, whether member states, in particular the recipient member states, and we are talking about the transfers of the more than 10% of GDP, so huge. So thinking about the two countries at the front line in terms of receiving funds, which is Spain and Italy, whether they will be able to put forward programs which are credible and resolute. And I think if that is the case, then it's going to be, I think it has the potential for a paradigm change at the European level. Thank you.
Terrific as always, Marco. Thank you very much. And I appreciate your linking it back to your speech a year ago at Peterson and the accompanying Vox EU paper, which I think was profound. I actually wanted to, before turning to the audience questions, and I encourage audience members to submit questions on the Q&A. We have 3 and welcome more. I want to pick up and push you a little further on where you ended up. I think it is a very sober but still hopeful message for someone in your position to say this could be a paradigm change. And it depends on the take up by the worst hit member states. So I guess 2 questions. First, is there any further agenda, active positive agenda, that you and the Commission would want to see in terms of making this a paradigm shift? Or are you going to sort of sit back and see how the member states play out? In particular, is there anything in terms of surveillance, discussion, you can do in terms of encouraging take up by the member states of this program? And second, there have been rumblings from the ECB, including from Yves Mersch, but not just him, about the ECB to some degree calibrating its own programs depending on how the member states respond to the available resources. And for some of us, this has echoes of some not great things the ECB did early in the Euro crisis a decade ago. Do you see, what do you see as the ECB's role vis-a-vis the Commission and the member states on this?
Yeah, thank you, Adam. I think two very important issues. Now, paradigm may change or big one-off. I think what we are doing on the surveillance side, we are clearly stating that this is not a shadow program of the classic type. So I think a lot of emphasis is on national ownership of the programs. And we are going to accompany the member states in this. The countries in the countries' programs will have to respond to what we call the country-specific recommendations in the European semester. So we are going to help them to respond to that and to tackle, let's say, the double transition that I mentioned before. We have issued guidance to the member states to make sure that they conceive a program which is strongly national, with strong national ownership, but at the same time responds to the to the imperatives of the time. We have also given the opportunity to member states to present draft programs beforehand. So as of mid-October, 5 countries have done it so far, so as to start an interaction with the European Commission in order to ease up then eventually the actual adoption by of the programs by the Council eventually. So all this is a much more cooperative venture than was during the financial crisis. Second point, I think, is we are trying to push member states to seize the opportunity to look at at these issues, not only on a country-by-country basis, but also on a transnational basis. I mean, we have transformative projects. Think about hydrogen, for instance, or similar projects where national dimension is not does not have the critical mass. So we are pushing towards member states putting forward transnational programs, financed by the EU, by the next generation EU. Finally, I think the litmus test of all this is going to be on whether or not we are going to be able to reopen the EMU chapter. I mean, this got stuck during the crisis. I think attempt to finalize, let's say, banking union got blocked. I think it is going to be very important that not only we implement what we have put in place, but by overcoming the nasty divisions between creditors and debtors, we can also reopen files and negotiations on completing economic and monetary union. I'm thinking about banking union in particular, and I think also very importantly in capital market union. I think this is absolutely essential, because even though Europe will inevitably remain banco-centric compared to the US, if we do not have an adjustment which is more equity-based, we are not going to get where we want to be. I mean, if you think about the financing of projects in the environmental transition, I mean, these are short in collateral and long in ideas. So I mean, banks via bank loans they are not going to finance this type of project. So we will need equity clearly, and also for the adjustment from a macroeconomic perspective, adjustment within the euro area, much more solid if it is via equity rather than via debt. So capital market union absolutely essential in this. I don't want to make comments. I'm usually quite outspoken, but on the ECB too much. What I notice first of all is that Christine Lagarde has been very, very clear on the need to have fiscal support, fiscal capacity, and actually being much less shy on the issue of coordination of monetary and fiscal policies. So I think the coming of age of the ECB, I think, has been very important on that front. I have to say, I do not see the substitutability between next generation EU type of interventions, even loans, and what the ECB is going to do on the PEP, I think on the PEP program. What I recall, and is going to be very important, is that in the course of next year, we are going to have two important reviews of our policy strategy. There is the monetary strategy of the ECB and the surveillance review of the surveillance, macroeconomic surveillance of the Commission and the Union, including the fiscal rules and the Stability and Growth Pact. Clearly, these two processes are not, let's say, formally coordinated. So there is not a formal coordination ex ante, but what is very important is that there is an outcome which is coherent ex post of the two reviews. So we'll know, rendezvous to next autumn to see whether actually we have an architecture on the monetary side and on the fiscal side which would allow to achieve this, let's say, more balanced policy mix, which is badly needed.
Well, we will hold you to that and invite you back roughly a year from now to help us make that assessment. One operational thing, Marco, I didn't want to interrupt, but could you move either slightly to your left or move your camera slightly to your right so you're more centered? Thank you.
I'm skewed to the left usually.
Yeah, but you were skewed to the left as viewed, indeed.
Okay,
now I'm going to turn to the questions from our registered audience. There are a number of questions regarding the European Parliament and the issue of the rule of law threat to veto from Poland and Hungary. In particular, how much is this likely to delay the recovery fund being ready for disbursement? Does the Commission have a next move? There are these discussions of it moving to being intergovernmental rather than European, which I think most of us agree would be a bad outcome. How much do you worry about bad market reactions if this becomes a protracted delay? Again, there are a number of questions about what's happening in this situation.
Adam, I have to be a bit reticent on this. I think clearly what happened yesterday is not good. And there was this veto by Poland and Hungary. I think it was not totally unexpected, disappointing nonetheless. So I think the discussions are going to continue. I repeat that we are, I think, very lucky that this semester is under German presidency. So I think Mrs. Merkel will put all her political energy into solving this. I recall that this is not costless, obviously, for the two countries. Next Generation EU, beside the multi-annual budget of the Union, Next Generation EU involves transfers to Poland and Hungary of a bit more than 11 percentage points of their GDP, which it's a very, very sizable. So it is not a symbolic issue. So I hope and trust that we can overcome these problems and do that as quickly as possible. In terms of the process, I recall that an agreement as early as possible it would be needed because in order then to actually implement the program, meaning in particular giving the possibility to the Commission to go and borrow in the markets up to 750 billion that I mentioned before, we need to have a decision on the ceiling of the own resources of the financing the EU budget, which requires the ratification in most parliaments, in the national parliaments in member states. So there is a process there after the agreement at the European level, so that there is member states give the green light to the Commission to go ahead. So this is going to take some time. I would hope that it can be done, very very quickly, and that we can then, second semester, summer, also be ready then to go ahead with the actual implementation of the program. The fact that we have given the opportunity to member states to present national plans in draft as of October, then as of beginning of next year till spring, they will present their final program, hopefully already somewhat digested to ease a speedy adoption. I think it's important then to shorten the timeline there. So I really hope that the sense of responsibility will prevail, because we are not, as I said, in this linear exit from the crisis. We have the second pandemic, and I think our citizens who have actually supported overwhelmingly the move by the Union, even in the skeptical countries, they will not be disappointed, and markets do as well.
Thank you very much, Marco. I appreciate that it's a delicate matter for you as a Commission employee to speak on this, but I also recognize that this is obviously central and our audience rightly raises it. I'm going to go to another couple questions from the audience. Thomas Wieser writes, NGEU can be a paradigmatic change if it is very successful. For that to happen, good governance is of the essence. How can the Commission make sure it is critical of bad projects and ensures corrective action? How will you ensure getting past the administrative bottlenecks? And he goes further to say, if this works out, this will be transformative. So
Okay.
You said it's not the old program, it's about national ownership, but
yeah.
so how do you balance these
yeah.
things?
Okay, let me, through you, give a big hug to Thomas.
Does that sound like the Thomas you know?
Yeah, look, this is the, and we count on him. Actually, I mentioned before Capital Market Union, and Thomas in his new life after head of the EFC has actually contributed by chairing the expert group on Capital Market Union. So I count on him with the continuing flow of ideas. But on coming back on this, I think good governance, and I recognize Thomas on this because he has said this so many times and always rightly so, is absolutely essential. I think we are working with the member states to make sure that as I mentioned before, what is put on the table in terms of investment, in terms of reforms, actually is followed up with a proper governance reform at the national level, and with the proper let's call it degree of friendly intrusion from Brussels. What I have emphasized with the member states over and over, it is very important that when they present the programs, they show the whole movie. So not only what is a clear and rigorous assessment of the bottlenecks, what the problems are, the priorities, but also the operational projects, how they cluster reforms and investment, the costing, the monitoring, the possible withdrawal of projects. So the whole movie has to be presented in the programs, let's say, on the basis of macroeconomic and fiscal outlook, which is, let's say, a credible one. So we have issued guidance to the member states to make sure that these elements of governance are actually part and parcel of the programs, not an add-on later on. And I think if you ask me of all this, what is the mother of all reforms in Europe, is the functioning of public administration. I think this is going to be clearly where the new next generation EU and the Recovery and Resilience Facility will succeed or fall. And I would hope that if we succeed, actually the legacy of better functioning public administration and better governance at the member state level is actually even more permanent legacy than the transfer of money that is nonetheless very important.
Thank you. And Thomas hugs you back virtually. What you just said, I think, leads to another thing where we've had several questions from audience members. I'm sorry not to rattle off all their names. How much do you think, sort of getting more broad than just the specific issue and the specific deadlocks now, how much do you think the COVID response and the common pandemic are contributing to a new general spirit of integration in Europe? How much in the exit of the British? I mean, what is die Stimme in German terms? What is the atmosphere in Brussels around the member states now? Is it some sense business as usual, or is there an openness to a deeper integration?
Look, I think I can repeat what I've indicated before. COVID is a different animal than the financial crisis, because financial crisis was very much seen, rightly or wrongly, first policy induced, second, and that is the wrong part, essentially fiscal in nature.
I agree with you, but thank you.
So I think this is exogenous and in a sense, but I was in a webinar with Jakob von Weizsäcker, you all know him. I mean, he characterized this as, as a natural catastrophe. So moral hazard elements, moral hazard consideration, which dominated the financial crisis, they have very little role in this. So I think this gives a sense of togetherness, which is, I think, much stronger than during the financial crisis. I think so nature of the crisis has changed the rules of the game in the interpretation and the policy response. I think the second one, I would dare to say, that is the change of attitude in Germany. I think the awareness that in a world fraught with many hazards, we cannot hope that others pull us out of the hole in which we have digged ourselves. So the geopolitical element is important, and the awareness that an export-led growth model is not an element of strength, praising the competitiveness of the economy, is an element of weakness, because an element of vulnerability, because you depend on the others. So I think there is a rediscovery of Europe, rediscovery of the single market, I think with a chain value also within the single market. So I think this gives a better prospects. And finally, I think a concept of solidarity, which is much more an insurance-based concept, i.e. self-enlightened self-interest, knowing that I help you today because I don't know what is going to be the shot that will hit us tomorrow, and I can be in the front line of this. So much more, instead of a unidirectional generosity type of concept of solidarity, something much more insurance based. And I recall in this a very beautiful definition by Jürgen Habermas of solidarity, which points precisely in this direction here. So now I think Germany has moved, I think, down, coupling responsibility and solidarity. I think now we expect that those who are recipient, they climb up the ladder on the responsibility dimension as well. And I think that will determine clearly whether this is, as I said, an important one-off or a paradigm change.
Thank you. Again, thanks to all our audience for so many rich questions. Turning now to the combination of responsibility and solidarity transatlantically. Creon Butler asked, do you see ways in which the Next Generation program could significantly influence the position the EU takes on G20 global economic challenges, particularly given the likelihood that the Biden administration will, we hope, be more open to re-engaging on global matters? And similarly, Jean-Francois Boitin raises the issue of maybe we're going to see actually less solidarity internally in the US between the Senate Republicans and the Democratic states, and more solidarity within cross-border within Europe. How does that affect the common global economics and the common pursuits?
Okay, I will not make any comments on the US Senate before Georgia, but less of a joke. I think I emphasized before, I think the geopolitical considerations being at the roots of one of the reasons why I think we conceived a program of this, a response of this sort. I mean, I remember again during the financial crisis counting on the US, counting a lot on the US. Going back, Tim Geithner, but also myself working hand in hand with Lael Brainerd at the time. So counting on the push of the US for Europe to do the right thing. I think we have to take our own responsibility, and I think in a geopolitical world, which is a very complicated one, I think even with after the present administration, I think it would not be I think wise for Europe to end up in sandwich between the US and China. And I think it would be a terrible mistake if one, having conceived the Next Generation EU as autonomous response of Europe for having an important role in the geopolitical arena, then thinking about a more European-friendly US administration, we would then draw the conclusion that we don't need that because there is the US. I think that would not be, I think, the right response. clearly, I've read, by the way, and listened to Larry Summers in the briefing, in the memo briefing published by Peterson. What is interesting amongst the many interesting things that he says is what he does not say. He does not actually mention Europe in the memo, which I find is a great thing, because usually we are finger pointed for not taking enough our responsibilities and not doing what is needed. The fact that following also the type of response that we have designed, that we are not at the forefront of those to be pushed, at least on the macro area, I think is a very good thing. He mentions taxation. He mentions their alignment with France. I think taxation, by the way, which is a competence of Commissioner Gentiloni, so is going to be, I think, a key priority next year. And thinking about the G20 under the Italian presidency, I think there is I think an opportunity to relaunch the G20 as the forum for international cooperation. And I think a number of proposals that Larry puts forward in the memo, I think are very valid and worth pursuing.
Thank you for mentioning that, Marco, because that's actually where I want to close. As you are obviously aware, and I hope our audience is aware, we are running this ongoing project at the Peterson Institute, Rebuilding the Global Economy, with memos to policymakers. We've started with the Americans part, obviously, because of the election and transition. But we are preparing a set of memos and advice to European policymakers. And we will be rolling out on Thursday, December 10th, our advice to the ECB from Olivier Blanchard, and our advice to the European Commission, and specifically DG ECFIN, from Jean Pisani-Ferry and Angelo Bide. And then we will also be turning to the less macro, more micro aspects of the Commission's economic remit on Monday, 21 December, with memos from Robert Lawrence to DG Trade, Reinhilde Fuglers on innovation, Jacob Kierkegaard on market policy, and Nicholas Ferron on financial integration. So we're glad you're listening, and we hope you'll be listening, and our audience will be listening to those as well, because we do have something to say for Europe. And God willing, as you say, it's not a matter of conflict. It's a matter of constructive progress, building on what Europe has done in recent months. We've come to the end of our time. I just want to thank our audience for engaging and listening. I want to thank Marco Buti for once again showing the thoughtfulness and the sense of public duty that goes into true public service in the economic sphere, and for his open frankness beyond what sometimes bureaucrats are willing to do in a spirit of genuine substantive engagement. We wish you and Commissioner Gentiloni, who we were privileged to host a few months back, the best of success, and including on international tax when the pandemic lifts.
Thank you very much, Adam, and looking forward to this next rendezvous.
Very good. Thank you all very much. Have a good day.
Thank you.